Hello everyone. Today I am going to provide you with an overview of MCX FNO for crude oil. I will discuss the view which we have shared last week. On that view, what strategy we have initiated and how it has panned out. And at the end, we will discuss how crude oil is looking at the current levels and what should be done for the coming week. So to start with, this is a chart which we have shared on 16th of July when crude oil ended at 7813 levels. So here the view mentioned was buy on dip and sell on rise. So as we can see on the charts here, this is a weekly chart. Earlier, crude oil made the high of 9,996. And from those levels, this candle, it slipped down to the lows of around 7,200 mark before bouncing back again to 9,600 odd levels. So the index, this counter formed a kind of lower highs at the high levels and thereafter it formed a bearish weekly candle. So we have been trading crude oil with a negative bias from around 9,200 levels, expecting it to retest the supports of 7,200 and 700 levels, which was a buy level once again. So in last 5 weeks, more or less crude oil has reacted in line with a view below 9,200 mark. Crude oil slipped down to the lows of 7,300. And last week, from those levels, it bounced back to end at 7813. So, on the start of 17th of July, when it was trading at 7813, this is the last candle which was formed on a weekly charts for crude oil. So here we have seen that crude oil has witnessed some pullback from the low levels, and as we can see here on the charts, crude oil was having a resistance, strong resistance at around 9,000 mark. So as per our write-up, what we have mentioned for crude oil for the week 17 July to 22nd of July as an outlook was that going forward consolidation can be expected within a range of 9,000 and 7,200 with a silver line of 8,500 levels. That was a tug of war level. That means trading below 8,500 mark, which was the immediate first hurdle, the bias will remain sell on rise. And in the last paragraph, we have mentioned that technically pullback should encounter with fresh selling pressure at high levels, while dip towards 7,200 to 7,000 zone can attract fresh buying interest. So a consolidation amid volatility can be expected in near terms within a broad range with buy on dip and sell on rise outlook. So this was the outlook that the bias is a high volatility within a stipulated range of 7,300 to 9,000 with a silver line of 8,500 mark. Now on this view, we have initiated a high volatility strategy as on 18th of July 22. As on 18th of July 22, crude oil was trading at 7,885 levels. And what we have done is we have bought 17th of August 7,800 call at 438 rupees. And on the same day, we have bought another leg, that is 8,000 put at 685 rupees. That means it was a kind of market neutral strategy where we have bought both call and put. The view was that there will be a high volatility and we will book one of the leg, whichever is coming in the profit initially, and we'll wait for the second leg to come into the profit. So in line with the view, we have booked 7,800 ka call, which we have bought at 438 on 19th of July at 610. So there we booked a profit of 17,200, and then we waited for the second leg to come into the profit, that was 8,000 put. On 21st of July, we have booked the second leg also at 668, close to our cost, though after booking a profit, this strike price 8,000 moved to the highs of 700 plus. But since we have booked both the legs, the first on 19th of July and the second on 21st of July, we managed to book a total profit of 14,700 per lot, and we have closed the position just in a span of 3 to 4 trading session. So the bias was high volatility and we have witnessed high volatility. The counter initially made a high of around 83.50 and thereafter it tanked down last week to end the week at 7660. As we can see on this chart, once again it has formed a kind of negative candle on the weekly charts. So in line with the view, last week crude oil witnessed a high volatility. Initially, from the start of 7800 odd levels, it made a high of 83.50 before slipping down to end the week almost at its lows at 7660, down 1.96%. Now for the coming week, as we can see here on the charts, once again 8500 levels can be looked as a major tug of war point, or you can say a kind of strong resistance zone and supply zone for crude oil, and on the lower end 7300 to 7000 mark that continues to act as an immediate target come cushion zone for crude oil. So as per the write-up what we have mentioned for this week, 25th of July to 29th of July, crude oil can consolidate within a range of 8500 to 7000 level with a negative bias below 8500 mark. Technically, a pullback and a consolidation amid high volatility can be expected in near term within a broad zone of 7000 and 8500 mark. Dip towards 7200 to 7000 level can be looked for buying, while on the higher end 8000 and high levels can be looked for some kind of negative strategy with crude oil expecting range to downside bias. So that's the bias for the coming week, that the range to up above 7000 with a strong resistance as 8000 mark. Now, as per this strategy, as per this outlook, what we can do is when crude oil comes down towards the support zone of 7200 to 7000 mark, we will look for some kind of bullish strategy, expecting a pullback once again towards 8200 to 8500 mark. And initially, any kind of move toward those levels, that is 8200 to 8500 levels, we will position ourselves with the negative bias strategies. Thank you for your precious time. If you find my content relevant, then kindly get in touch with us with your queries. Thank you very much.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.